In fact, so interesting, we want to get immediate reaction to this push for a rate cut while saying that the economy's in great shape. From Nuveen Asset Management, Chief Equity Strategist Bob Dahl joins us on that. It's a question, Bob, obviously, just traditionally speaking, if things are great, boy, maybe that's not the time to cut rates. But the argument is, I guess, based on inflation. What do you make of this and what the Fed should do?
Well, I think the Fed's where it should be. The language has changed a lot. It was kind of they'll never have a meeting without raising rates in the fourth quarter. Now they're never going to raise rates again. I'm exaggerating, obviously, but I think the Fed funds rate is appropriate. Look, we have nominal GDP, real plus inflation, running between 4 and 5%, and that probably means the Fed's where they should be. We need some more time here to see how the numbers come out. The employment report today was good. It wasn't perfect, but It was good enough. And so I think we move on with the Fed kind of sitting off to the side, let them sit there for a while.
To that point about the jobs report, before it came out, or at least in the months prior, there's been discussion out there and debate about whether the economy is really slowing, maybe even heading into recession. As you say, even if it wasn't great, it definitely was good in many respects. So does that, at least that takes that talk off the table, right? Is that fair? Recession talk?
I hope so. I mean, our view all along was probability of recession anytime soon, not high at all. Signs of slowing, yes, we continue to see those. Maybe signs of an economic a cycle that's maturing some, but no signs yet of a recession. And so I think we should leave well enough alone. We're going to get corporate earnings here. Let's see what companies say about their businesses, about what it looks like going forward. I mean, a lot of the concern in the fourth quarter, of course, was related to things overseas. Right. And those worries are still there to some degree. In the U.S., we're doing okay, thank you.
So some of that comes here, I guess, right? You could pick out, say, manufacturing, which you just showed on the screen, which we did see a drop last month in manufacturing employment. So the argument from the president, or I guess maybe more so from somebody like Larry Kudlow, is to say we're not worried about the economy now. We're worried about the future. Now, some on the political side might say that they're looking for a scapegoat if things turn south. But if you're not that skeptical, you say, well, maybe that is a legit worry, that we're starting to see it. Manufacturing jobs declined last month. And maybe that's the argument in terms of the Federal Reserve, is that things are okay now, but let's keep them okay.
Yeah, look, as I said, in my view, it was good, not great, and that's what I would pick on. Manufacturing employment, the retail trade numbers were not great either. So it's not a sign of a perfect economy, but, we don't want one that's growing so strong where inflation's coming back. Inflation's settled in.
Well, that's true. From an investment point of view, is it Goldilocks style, Bob? Is that what you're trying to say from an investment point of view?
A bit so. I think that's a lot of what the rally was. The 20% move up from Christmas Eve was we're not going to have a recession. The economy's okay. I mean, we rocketed pretty fast, but I think that's where we are. Now the market's going to need, okay, now show me what's going to happen from here. Right. I've recovered what I've lost because we're not going to have a recession. Now let's see how good the economy and, more importantly, earnings are.